Good morning, everyone, and welcome to the European crossover webinar. And we are continuing to see the dollar weaken here. One moment, let me. And I said the dollar, but I mean the dollar. I meant the the euro, and obviously the dollar strengthened here. We've been talking about this for the last couple of days, or last few days, actually, since the beginning of the week, about how these bears are just selling the euro with impunity. And we continue to see it fall, and we discussed it also in the discussed this also on the FX Daily Wrap Up, because Lagarde had mentioned yesterday that she was open to, they're still not open, but that there was still further they could do as far as the stimulus, and then she kind of qualified that by saying, but we'll check to make sure whatever things are appropriate. It really doesn't matter because, as I said, was when she said that, she's pretty much telling you what she's going to do, and they're going to go in and still continue to go in and take further action, and she's laying it right there in front of you. So I know people have been interested in trying to pick this thing up, but like I said, I just, they're telling you right there what they're going to go and do, and I don't see where there's going to be any where they're going to go in and decide all of a sudden to go the other direction, or that you think that now's a great time to pick up the euro when every time Lagarde's name comes up, whether it was with being referred to or chosen as the ECB head, or yesterday, I mean, she's going to go in and go along with what Draghi's been doing, and her her stating that they were going to look if what would be appropriate, or is kind of, I mentioned yesterday, tantamount to someone saying, I'm gonna speed, but I'll be careful. So that's where we are here. But let me go on and pull up the data that we have here for today, coming in today. At the bottom of the hour, we do have mortgage approvals out of the UK. And then at the top of the next hour is going to be CPI data out of Italy, as well as HICP flash out of the Eurozone. Also at 6 a.m. Eastern, final GDP out of Italy. And then core PCE for the States at 8:30 Eastern, as well as Canadian GDP and Canadian producer prices. And then we do get University of Michigan, but that's final readings here. One of the things we talked about yesterday was the importance, if the market were to close above here, and it has closed above here, this 98.36 area here, and has opened the door for us to go even further. Obviously, that's translated with the euro going lower here. We'll continue to push here. No respite here in the case of the euro. When you look much further back, we'll go and look at that. The old low was right here, 1027. I guess right there, 1027. We're just about there. To me, the support's going to be right there at 110. And they may, if they try to push down, I guess they'll try and see if they can take that out. But one moment. Still pressing here. And the dollar yen did go in and squeeze up a little bit higher. We talked about that yesterday, mentioned in the chat room. Even though we had 643, we thought that we could push higher. We Actually may have just passed this 127% extension of this area, but I had mentioned here that we might even get even further up to the 690. I may have squeezed it a little bit too far, and that was a decent little pair back from there, about 36 pips, I guess it would have been. We're kind of edging back up again. And we're just going to quickly touch on the news here. One news story, that's all. And it's on the yuan. The yuan resumed its decline against the dollar on Friday and was on track for its worst month since China's currency reform in 1994 due to trade tensions with the U.S. and a slowdown in the domestic economy. On Thursday, the yuan snapped a 10-day losing streak, the longest since December, as Beijing and Washington gave signs they discussed a coming round of face-to-face negotiations in September, raising hopes to end the costly trade war. But early Friday, onshore yuan slipped after opening at 714.95 per dollar and was changing hands at 715.11. The PBOC set Friday's official yuan at its weakest in 11 and a half years. The PBOC midpoint is 708.79, 21 pips weaker than Thursday's fix of 7858. At the start, start of August, Trump threatened to slap fresh tariffs on Chinese goods. Days later, China let its currency slide past the key 7 per dollar for the first time since the global financial crisis. Analysts and traders believe that during August, the central bank heavily used its counter-cyclical factor, a tool introduced midpoint fixing mechanism in May 2017 to reduce price swings. Traders said corporate demand for dollars remained heavy on Friday morning, dragging the spot yuan lower. If there are no more new tariffs, the spot yuan is likely consolidated at this level, said a chief trader at a Chinese bank in Shanghai. Becky Liu, head of China macro strategy at Standard Chartered Bank in Hong Kong, said in a note she expects Chinese authorities to avoid heavy-handed intervention to maintain the yuan at or any specific level, and authorities will likely allow further appreciation in an orderly manner while continuing to curb excessive movements. With that, let's just go on and move into the bias chart. And to me, that's support there on the euro at 110. I don't really care about, this area here, 1027. Look, it's end of the month. Things are pressing. If you want to buy 1027, you can buy 1027. I cautioned this since all week long, stating, as I mentioned, that the bears are selling this euro with impunity. And as I mentioned, I didn't see why someone would be buying it yesterday, and I mentioned that on the daily FX wrap up. Is it Lagarde's telling you right there she's going to take even further action? So I'm not sure why someone would be saying, "Well, it's a great time to buy the euro," especially on the last day of the year. We could see this thing really push on. We talked about this. Is also the disappointment that this did come to fruition, as I was saying, is that the piss poor opening at the beginning of the week, when other pairs had fared much better, went much further, and then we started to slide, and that opened the door for us to continue to weaken. And that before we know it, we might end up giving up most, if not all, the gains, and we've done just that. Okay, we've given up all the gains now, and now we're pressing to these recent lows. And things that I just don't see where there's anything you can point to that's good for the euro. At this point, that's going to be resistance 1070. 1070. And let's go move into the cable. Well, we're trying to hold just above this key area here with the cable. There at 2162. Still have 2137 there if they want to dip down there. We're going to stay with this 2137 here. On the upside, though, we'll lower this right here. And that'll be 2236. And let's go move into the Aussie. Well, we did have the 67.26. We actually been as low as 67.06. As we come into the month end and into summer and this demand for dollars, we may see this Aussie press even lower. And here's that key level, 66.97. We're going to go on and use this, and that is very huge support here. We're not that far away from it, so let's go mark this off. And resistance is going to be 67.53. Boy, this Kiwi continues to just get knocked harder. Right there, 62.55. 62.55. For the Kiwi. And it's going to be 63.12. For right now, 63.12. Which isn't even that far away, but that's going to be the resistance at this point. And let's go move into the dollar CAD. Well, no changes here. 33.36 remains the resistance. Now, we do have Canadian data this morning, and we'll go and bring that highlight. There's a potential we could go and run up there. We do have Canadian GDP and producer prices. So there's a potential we could go and make a run up there for that 33.36. But that's going to be resistance until they're able to go and take it out, 33.36, with support being 32.69. Right there, 32.69. That may be a little bit close in light of the data that we're going to have. So let's go with this 32.56 and move it down here to 32.56. Because that data, you can easily, we know that the dollar CAD, it may even press up beyond here, this 33.36, but we'll have to, once again, you can go beyond that, but the key will be, can we get a 2-hour close above 33.36? Now, the downside 5-star support will be 32.56. Let's move this out of the way. Now let's move into the dollar peso. Still, and we're just actually just above that key zone here, 2011.3. Yeah, let's see. Keeping it tight. The bias chart support is going to be at 2010. And resistance will be right there at 2020. So 2021 right there. And let's go move into the dollar yen. I thought that we could still squeeze a little bit higher yesterday, and we did. But still, this is a bit of a piss poor showing when you think as to where the S&Ps are right now. They're on the highs right now and still going higher. Um, For now, we'll just have to put this resistance here at 674. And support coming in right there at 612. And let's go move into the cash stock index. Well, we've already gone past this 98.36. I was trying to press even higher. Let's go and take a look into the 2-hour chart. We'll go right there with 98.67. This market is just up and away with that demand. It'll be 98.30. And with that, let's go and move into the cross rates. Well, we're going to go and keep this still the same here at 67, 60, I apologize, 66.78. Still relatively tight ranges here in the Kiwi Yen, with the upside it'll be 67.40. And onto the euro yen. Well, no changes here in the euro yen. We're kind of stuck here with the downside risk, but um, just kind of right smack dab in the middle, and you can say between these two ranges. But on the downside, if we do weaken 1718 and still remaining up here is going to be this 1777 here. Let's go and move into the Euro Aussie. And you can see after a big move, look how quiet we've been here. Um, and even with the weakness in the Aussie dollar or Aussie versus dollar, you can see you just can't get any kind of strength here with the Euro Aussie. Downside's going to go and remain the same here on the bias chart support 64. The upside, we can go and impair this back down here. Not by a whole lot, but it's going to be 64.80. Overall, still remains bullish, but certainly weakening. And let's go on to the Euro Kiwi. Still very bullish, as you can see that, but we're just in a very, very quiet area here. Obviously, the continued weakness here with the Euro with the Kiwi, but certainly haven't seen this move to even higher highs at all. Support then. Right there, 74.59. And the upside, 75.17. Actually, 75.71. You did get UK consumer credit, uh, but we're not seeing any movement, whatsoever, really, with the cable. Let's go on and move on to the Aussie Yen. And the Aussie Yen remains just as quiet as can be. Look at this, almost no movement. No change, obviously no change here in the bias chart. 71.20 with 71.81 on the upside. Just no movement. You can see how dead this market is. And let's go move into the guppy. We can move this up a little bit higher. Just at the top of this range, 29.98. Actually, it's going to be 130, but if we do get just a little bit of strength in the sterling, moving here on the little bit lower end, these ranges just keep getting tighter and tighter. once we get back from holiday, a lot of traders, European traders get back from holiday, U.S. traders get back from Labor Day. We'll start to see things pick up next week. Well, I wouldn't say at the beginning of next week, but probably at the middle of next week, things will start to add up a little bit. And then generally, it takes about a week before things get into full swing. As Blake had mentioned before, then you have traders come back, you have meetings, and then traders start to position themselves. And probably the following week is when we get things in full flow. But in the meantime, it's going to be 130. And on the downside, 29.13. And let's go on to sterling on. Well, look how tight we are here. So this is going to remain the same here with sterling on. Not really saying anything much here because, like I said, these dog days of summer, things are quiet right here in some of these cross rates. We're not even moving too much. But they'll remain the same at 81.74 and 80.58. Let's go and move into the gold market. We have continued to see this market weaken here. We talked about this yesterday on the FX daily wrap-up. I was saying watch out for 1527, looking for some support, and then the chart started to lock up. But that's how we were closing the show. So we did get down here to 1525 before we saw a bit of a bounce. But then we rotated right back down here to come into 1520. We kind of bounced around. But since that area here, when we were up here in the 1550s, certainly the market has continued to weaken a little bit. Still fairly strong, though, overall. Looking at the S&Ps, that even surprises me. This is one of the reasons why I thought the dollar yen could move a little bit further on the upside. But we continue to move higher here with the S&Ps on their highs, and still, I mean, disappointing with the dollar yen. We're at 642 now. We did get up to, what was it? I think it was 668 yesterday. So it did go on and go further than, we talked about that in the chat room. We thought we'd squeeze a little bit further, but I thought we might be able to add even more to that than a lot of the S&P. So you can see certainly the dollar yen's been just a bit of a disappointment there. As far as I thought, we might even push up to about 690. Bund still remained relatively strong. Look at the 10-year yield here. It's already come off, but the Bund still, as far as rates, continue to remain very, very weak. But the price is still fairly high, which look at the 10-year yield already coming off here. So it's just going to put more demand here for the dollar. We'll go back to that. The euro, 42, which is really just what was about 9 pips off its lows, maybe 8 pips, but obviously a far cry from where we started out the week, as it gave up the entire amount of gains from last week. I mean, the entire run all the way down to 53, we certainly took that out, and with this demand for dollars. Now we'll see, like I said, we've already stretched this quite a ways. It's already the end of August. I think you probably knocked enough people out of the box. The dollar is going to have to me, it seems like we've come so far and we've stretched it so far, barely have seen any kind of a dip here back with the dollar. But that would be the resistance here right now, which would be that 98.67. But we've come quite a ways. Look at this. It's just been, look at that one steady stream just higher with not even a pullback. this just might have just dipped and then just reasserted itself. We'll see if the market can tire out a bit here. We stress these things about as far as they can go. As I said, with the euro, I don't know who's going to step in on the last day and try and initiate brand new shorts, but obviously it certainly looks like the euro is going to be just heading lower at this point. It's hard for it to go and capture anything. Obviously, we were able to extend lower with Lagarde, stating that there's more room for them to go and do stimulus-wise, but then she turns around and tries to qualify that by saying, but we'll see what's appropriate. I mean, like I told y'all yesterday, I mean, how are you going to go and stand in the way of that if she's telling you straight up? The euro was going to move lower. But that's what we're seeing here. Peso is coming into that support we've got here for 2010. We do have data out later today, as I mentioned. Coming into the States, core PCE, as well as Canadian GDP and producer prices, Michigan sentiment, but that's going to be final readings on Michigan sentiment. So that's what we have. Good luck for the rest of the day. Once again, I've kept it relatively quiet this week. As I said, and probably worked out in my benefit. I know a lot of people are trying to pick up the euro, and there were certain areas, but I guess after last week, as I mentioned before, I picked it up on the way down thinking I was getting great value, and it just kept going lower. And fortunately, like I said, with the recovery we had last Friday, I was able to go in and get out of those positions with profits. But coming into this last week, I played it really very cautious. I know a lot of people in the chat room have still been fairly active, and props to them. But like I said, for me myself, I like to be in sync with the market as far as feel like I'm in the flow. And I obviously you want to trade with technicals, but for me, I just thought to myself, it being the last week, I thought at least for me, it was best to be prudent. But I have seen other people in the chat room have done very well and been still relatively active. So I'm fine. Coming into next week, waiting next week as volume picks up and see where we stand. But once again, good luck for the last day of the summer, last day of the month. And thanks for joining us on the European Crossover webinar.